Hey everybody, Frank Finance here. Hope you're having a wonderful day. Today we're going to be talking about Biden's tax plan proposal. Now, for today's proposal, we're going to be talking about income earners making above $400,000. We're going to talk about changes to capital gains tax rates. We're going to talk about additions to the child and dependent changes, first-time home buyer credit, estate tax, step up in basis, changes to the 401k. And then we're going to go into corporate taxes and talk about tax rate increase as a minimum tax, a foreign profit tax, and an additional payroll tax. Now, when Biden was running for president, he said multiple times that no one making less than $400,000 would see an increase in their taxes. So what happens to anyone who makes over $400,000 a year? Well, they will see a top marginal tax increase from 37% to 39.6%. If you do look at what that looks like as compared to our current tax rate, the current top marginal tax rate is at 37%. At the point at $400,000, you see there's actually two tax brackets: 35% tax bracket between 400 and 600. And then above that is 37%. And what I'm quoting here is from a married filing jointly. The other tax that a person making over $400,000 could expect is an increase in payroll taxes. So right now, when you pay Social Security taxes, half of that is paid by your employer and the other is paid by the employee. Now, that's currently capped at $142,000. So you only pay that 12%, both the employer and the employee both pay that up to the 142. And the proposal is after 400,000. So there's a gap between 142 and 400 where no Social Security payroll taxes would be incurred. But after 400, there would be a constant 12.4% that would be split between the employee and the employer for additional payroll taxes. So next up on the list is capital gains. First, we need to talk about what capital gains are. So there's short-term capital gains. Does anything less than 1 year, that's not affected. That's paid at ordinary income. Long-term gains is what we're talking about with this proposal. So capital gains are a bracketed system, and depending on how much your income is how much you pay on a long-term capital gains rate. So what would you pay capital gains on? So you could pay capital gains on a stock purchase that you've held, long-term capital gain on a stock purchase you've had over a year. So looking at the table for capital gains rate, an individual income earner making less than $40,000 would have a capital gains tax rate of 0%. In between $40,000 and $441,000, that rate would be 15%, and above $441,000, it would be taxed at 20%. I also throw up the married filing jointly income range, so you can look at it there yourself. Now, under Biden's tax proposal, everything remains the same, and those brackets remained unchanged until your income goes over $1 million. And instead of having a preferred capital gain or long-term capital gains rate, it actually reverts back to the ordinary income tax bracket. Thank you so much for watching up to this point. Please consider subscribing if you haven't. Smash the like button and also add any comments down below. That really helps me out. Now back to the content. Moving forward, there are some changes proposed to child/dependents. The first one is the child dependent care tax credit increase. Now that is an increase of the maximum credit from $3,000 a year to $8,000 for one dependent. And then that's doubled if you have more than one, and it's capped at $16,000 a year. On the other side, there's the child tax credit increase. That's an increase from $2,000 to $3,000 per child that ages 6 to 17. And it's $3,600 for children less than 6 years old. Next up, we have an interesting one, first-time home buyer credit. So this is a $15,000 credit to first-time home buyers. It's very similar to the credit that was available between 2008 and 2010 after the Great Recession, really intended to help boost the housing market. Next up is estate tax law changes. So first off, the estate tax is essentially when an individual passes on money to their inheritance, there's a tax that's incurred on that inheritance past a certain limit. So currently those limits are $5.85 million for an individual and $11.7 million for a couple, meaning for a couple that any dollar over $11.7 million starts to get taxed. So those tax rates, I'm going to throw up right now what those tax rates look like. The highest rate currently is 40%. So for example, that 11.7 plus $1 million, that's when that 40% would kick in. And you can see this is a bracketed system, just like a lot of other ways our tax code is laid out. Now, under Biden's proposal, that would be half. So essentially that 5.85 would be cut in half. That 11.7 would also be cut in half. Now, to give you an example of what this would mean for someone getting an inheritance of, I'm just throwing out an example of $15 million. The total taxes due on the way the current tax code is written, that would be at $1.2 million due in taxes. Under Biden's plan, it would be the same $15 million inheritance. Total taxes due would be $3.6 million, so about $2.4 million more just in estate tax alone. Next up is step up in basis. This is currently my least favorite thing in this entire proposal. So currently a step up in basis is when someone passes away, you inherit an asset. When it's transferred to the person receiving the inheritance, the cost basis is adjusted to current price, current fair value. In the proposal here, the cost basis would actually be totally removed. So you would be paying taxes on the cost basis that the person who originally bought it at and not at when you inherited it. Now for a really quick example of that, let's say your mom and dad die. They leave their home to their only child. They bought that home 30 years ago for $50,000 and today its current fair value is $300,000. The only child wants to sell the property upon their parents' death. So under the current law, that cost basis is not $50K, it's actually $300K when it's transferred from the fair value. The child goes on to sell it, the taxes that are due is $0 because the original cost is now been adjusted to $300K. Under the new proposed law, the cost basis is $50K. There's no step up in basis. The sell price is $300K, and the taxes due on that transaction are $37,500. This assumes a 15% capital gains bracket. 250. The gap between 50 and 300 is 250K times that 15%. All right, so next up we have changes to the 401k. This isn't very well defined in the proposal. However, I wanted to mention it because this is one of the ones that affects quite a bit of people. So changes in the 401k. Right now, any amount you put into a typical traditional 401k, that amount is deducted from your taxable income. So you don't pay taxes on it in that year. You pay taxes on it when you pull the money out in retirement. What they're proposing is instead of a straight deduction dollar per dollar, that a percentage of that contribution would be deductible instead of just the dollar per dollar value. Now let's look into potential corporate tax law changes. So I distinguish between major changes and minor changes here. Now the first major change is a tax rate increase from 21% to 28%. Now it's important to note that in 2017, that was 35%. So that 28% is about right there in the middle between 21 and 35. This will definitely have a negative impact to corporate valuations, causing stock prices to go down in the short term. Now, number two on this major change is a minimum tax of 15% of revenue. Now, this doesn't matter if the company was operating at a loss or not. Whichever is higher, that 15% or the tax rate is what the company will pay. So if the company was operating at a loss and they were reporting negative, they would still have to pay 15% as long as they were making over I think it's $100 million in revenue. So it'd be at a minimum 15% of $100 million and then 15% of everything above 100. So two minor changes. The foreign profit tax increase was from 10% to 21%. Now, I don't know how big of an impact is. I threw that down on the minor changes. And then an additional payroll tax for employees with salaries greater than $400,000. Now, we touched on this earlier, that Social Security is paid half by the employee and half by the employer. This is that half paid by the employer. So what are the implications of changes to the tax rate for corporations? I kind of threw up a couple negatives and I could only think of one positive, at least from an investment standpoint. On the negative sides, valuations and stock prices will go down if this passes into law. It's as simple as if the companies are paying more in taxes, there's less money retained in the company, and there's less value that's able to be returned to the shareholders. So that will definitely decrease those valuations. I also believe that when these tax rates went down from originally 35% in 2017 down to 21%, companies, there was a lot of positive impact to wages, and that's definitely merited in the data. I think you could see definitely some impact to wage stagnation as well as part of this. And then the third thing is negative effect on retirees. So anybody who's holding assets in public companies, they're definitely going to see an impact to their portfolios with those valuation decreases. And so the biggest people who just don't have a lot of time on their sides are people who are currently retired. If people younger like myself, I have a larger investment horizon, it's going to be less of an impact. I don't have to have this income at this very moment. On the positive side, I will say that at least it's not as high as it was in 2017, that 35%. So at least, if I try to rationalize this here, it shouldn't be as big of an impact as that 35 to 21 was. It'll be a less of a negative impact. That's why I kind of said, is it a positive? Is it a negative? So yeah, I'm at least he's not proposing 35%. So I just wanted to flash the highlights of what we covered today. So for those who have an income less than $400,000, your taxes should not increase. That's the quote we've heard over and over again. Those above that $400,000, their highest tax bracket will increase to 39.6%. There is a capital gains tax qualification limit. So once you hit $1 million, you'll be taxed. Those capital gains will now be taxed at ordinary income. The child dependent changes, there's some increases in both those. And then there's the first time home buyer credit that looks to be reinstated at $15,000 credit. The estate exemption decrease, so this is halving the current benefit. The step up in basis is being completely removed. I think that's a huge mistake. That hurts both small and people with a lot of assets and people with not a lot of assets. 401k, I really think it would be a mistake if they made any changes here. I think you really want to incentivize people saving for the future and for their retirement and getting people off of Social Security. And I think the 401k is definitely a good way to do that. And so by making any changes to 401k, I feel like you're decentivizing for people to control their own retirement. And then lastly, in the corporate side, tax increase from 28.1% to 28%. That is definitely going to have an impact on stock valuations. So be on the lookout there and consider that while you're investing. Minimum tax of 15% on revenue. Again, If they are operating at a loss, they'll still have to pay a minimum tax. And then foreign tax profit tax increased from 10% to 21%. And again, those additional payroll taxes for employees over 400K. Well, there you have it, folks. That's the proposed changes to the tax law. Please consider subscribing if you haven't already. Like this video, that helps me out a lot. Share it to anybody who might benefit from this, and let me know what you think down in the comments below. Do you think this is a big deal, not a big deal? Let me know. All right, until next time, Frank Finance out.